Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, on to the earnings now. IT major TCS delivers in Q1 FY19, posts a big beat on all parameters. The company's constant currency growth came in at 4.1%, which is the highest that we have seen in the last 15 quarters. Rima is here with all the details from the performance of the company this quarter. Rima, good morning. The BFS commentary also did look positive.
Well, you know, Anisha, you can't find fault in these numbers. On all parameters, the company has delivered and delivered with a big beat this time around. So as you pointed out, in terms of growth, their constant currency growth of 4.1% on a quarter-on-quarter basis is the best in the last 15 quarters. Even on the margin front, the company delivered margins of 25%, a decline of only 40 basis points versus the street expectations of a 100 basis point decline. Even the erstwhile portfolio drags, which were in the form of BFSI and retail, have performed well this time. So BFSI has seen a 3.7% growth in the quarter, while retail CPG has seen a 3.6% growth on a constant currency basis. And as you rightly pointed out, the management commentary as well on these two verticals was quite optimistic. Let's come to digital now. Digital in the quarter gone by saw a 45% growth on a year-on-year basis, and it now contributes 25% of their overall revenues. And if you annualize their quarterly run rate on digital, we've already hit $5 billion. So that's the size of their digital portfolio now. For the first time ever, the company also started disclosing their deal wins. So they indicated that in Q1, the company's won deal wins to the tune of $4.9 billion. Of that, BFSI is $1.6 billion, while retail is about $760 million, which means roughly BFSI plus retail is nearly about 50% of the overall deal wins in Q1. Based on these numbers, the street and the analysts, of course, are very enthused. So the EPS estimates, say for FY20, have already gone up from levels of about 86 now to about 89 rupees, which means the stock is trading at 21 times FY20 after this 40% run-up that we've seen. But the expectations are high. Now the street is expecting a 10% constant currency growth delivered by the company in FY19. A quick run-through of the brokerages. Jefferies has upgraded the stock. CLSA reiterates buy. They've kept the target price at 2,200. Kotak, on the other hand, maintains a reduce on account of expensive valuations. Let's listen in from the management.
I think the BFSI story is especially very broad-based. So what we are finding is that there's a wide spectrum of clients, and some of our most forward-looking and forward-thinking customers has increased significantly their investment into new projects, and they find a lot of relevance from us in our investments in digital and in various areas, whether it be analytics or areas like I spoke about on agile and automation. So our investments are resonating very strongly with our customers. The growth that we are seeing is very broad-based, which hopefully sets us up.
Alright, so that was all about TCS. As Rima said, hard to find fault with those numbers. But as far as our markets are concerned, yesterday too was hard to find fault with as far as the moves on our markets are concerned. Key indices trading near 5-month highs. Nifty rallied almost 100 points. The Sensex 200 points away from record high, ended above the 36,000 mark. The Nifty Bank as well as mid-caps gained 2. However, after that, we got some fresh salvo as far as the trade troubles are concerned. So how are the cues stacked up today? For all of that, we have Sonia this morning. Good morning, Sonia.
Hi, Mangalam. Good morning. You know, in hindsight, every negative global news has been used as a buying opportunity in the Indian markets. And we've seen that, you know, perhaps that's something that could continue as well. So, yes, this morning we do have negative news from the globe. But this $200 billion of additional, additional negatives on Chinese goods is something that the street had already factored in because it was announced by the Trump administration earlier. So, having said that, perhaps the buying could continue. A 5-month high for our own market. If you look at the moves that we've seen over the last 6 months, the Nifty is now up almost 9% from the March lows of 9,998, and it's up almost 4% from the May lows of 10,430. So this market has been making higher tops and higher bottoms. Today, the market leaders could be IT stocks once again, post the good numbers from TCS, so keep an eye out on that. The rally is led by the global up move. So as we've seen even in trade yesterday, the S&P 500 closed at over a 5-month high. The Dow was up almost 150 odd points. And it's been the 4th straight finish in the green for the US markets. Even in terms of our own numbers, the FI selling has reduced quite a bit. So yesterday we saw the FI selling go down to just about 21 odd crores. Domestic institutions have bought almost about 294 odd crores. But yes, this morning the US futures are under a bit of pressure because Trump has declared those tariffs on $200 billion of additional Chinese goods, and the Asian markets are also under pressure because of this. But as I said, this is something that the street was estimating. So perhaps there won't be too much of an impact in our own markets. Finally, just keep an eye out on crude because Brent crude is back on the rise. The last I checked, it was trading close to $79 a barrel. But for our own markets, it seems like good results from the likes of TCS, IndusInd Bank, etc. will keep the mood positive as of now.
Okay, interesting to see whether the dip gets bought into, because as of now, Asia is under acute pressure. Hang Seng down about 560 points. Shanghai as well down about 2%. But as you were mentioning, Sonia, a lot of stocks to keep an eye out on, beginning with the earnings. TCS, the big boy.
Yes, TCS will be in focus. As Rima was saying, very good quarter coming in from the company. 4.1% constant currency growth, the best in 15 quarters. The management commentary was very positive, and the BFSI vertical is something that they spoke about in detail. They did say that this quarter has looked good and that momentum could continue. So expect TCS to be in the green. Apart from that, consumption stocks have really been leading this rally. So if you look at what happened in the last few days, stocks like HUL, Asian Paints, Britannia, Page Industries have all been hitting new highs. That's perhaps a trend that could continue. Even within the banking space, some of these players like Bandhan Bank, RBL Bank, etc. have been hitting new highs. So keep an eye out on those stocks. Axis Bank could be in focus. The board has recommended the names of 3 candidates for the MD and CEO position. So now there is more clarity on who will emerge post the end of Shikha Sharma's tenure. So Axis Bank could be in focus. IDBI Bank is also on our radar today, as the government has said that the LIC IDBI Bank deal may trigger an open offer. So do keep an eye out on IDBI Bank. KEC International has secured some orders worth almost 1,357 odd crores. So that stock could be in focus. And I'll also watch out for Adani Enterprises. The Adani Group has now emerged as the top bidder for those city gas retailing licenses, eyeing as many as 52 cities. Remember, Reliance BP Combine has dropped out of that entire bidding process. And so Adani Enterprises will be in focus. Remember, the Adani Group has demerged the city distribution business from Adani Enterprises. So, would be interesting to see how that plays out.
Thanks a lot. Stock of yesterday was IDBI Bank, up about 10-12%. Just keep an eye out on individual stories coming in out there. Right now, the impending LIC IDBI Bank deal remains on our top focus or top subject of focus. CNBC Tv18 now learns that the state-run life insurer LIC, that is, in all likelihood will have to make an open offer to IDBI Bank shareholders. This is in sync with SEBI's rules. Remember, an acquisition of more than 25% in a listed company is defined as control under SEBI norms and warrants an open offer. Sapna Das, who broke the story, joins us now. Sapna, what else are you picking up?
Well, we are clearly given to understand that the possibility of LIC making an open offer as far as the IDBI Bank deal is concerned is not ruled out as of now. There could be a high possibility on that front, and this may unfold as per SEBI guidelines. Though, of course, there is no official indication on this, or there's no official statement on this, but this is what we learn from reliable sources. Having said that, post-transaction LIC is going to be at 51% in IDBI Bank, also with management control, but of course the IDBI Bank board is going to be completely professionally run, probably at arm's length from the government as well as LIC. The other big clarification that has come in is probably also the fact that the government has not demanded any premium from LIC for diluting its shareholding in IDBI Bank in favor of LIC. So there's a very clear-cut no demand for premium message coming from government quarters. Having said that, very clearly this is not a disinvestment as of now. The government is looking at a dilution of its shareholding in IDBI Bank, probably by the issuance of fresh equity by IDBI Bank in LIC's favor. So no disinvestment right now, but yes, later on the government would very much be open once the valuations improve. Probably that upside will be also seen by LIC at some point in time. And of course, as per the regulatory approvals, LIC will also bring down its shareholding in IDBI Bank. The only caveat will be, of course, that will depend on valuation. So as of now, the indications are that probably this deal is going to require an open offer from LIC.
Okay, so the deal might require an open offer, but staying with the LIC-IDBI deal developments, we now have the first reaction from insurance regulator IRDA on the deal. Now, speaking exclusively to CNBC TV18's Yash Jain, IRDA's member Nilesh Sathe provided some clarity on various facets of the deal and mentioned that it is an investment that will be subject to timely exit for LIC.
When this proposal came, we thought that if it is ultimately going to benefit the policyholders, why should we not allow it? One. Second is, nowhere LIC mentioned that they want to own a bank.
Okay.
Although in media, print as well as, on TV, a lot of discussions took place that they want to own a bank, it will become LIC, IDBI bank, so on and so on. There is no substance in that.
Okay.
They never said that we want to own a bank. They wanted to make it an investment in IDBI bank. Now the question is, at any point of time, if you make investment, then you should be in a position to bring it down as well, and at appropriate time.
Okay.
That is exactly what we advise them, that it's not that you should continue to hold 51% till eternity. You have to bring it down. Money is not going to government.
Right.
Money will be going to IDBI bank, and it will help them in restructuring their assets and all that, you know.
Indirectly,
It's not going to government. It's not a disinvestment plan of government.
Right.
Bear it in mind.
Right.
Because that is also something which was talked about in media wrongly.
Exactly.
Second is, see, as a LIC is a leader in insurance, no doubt about it.
Of course.
You should be a leader in all branches of insurance. Take example, in case of bank assurance, LIC is not a leader.
Of course.
They want to be a leader in that as well.
Do you think it was an attractive proposition for LIC? Because again, one needs to understand that IDBI, a substantial part of its assets are non-performing. That way, do you think it made an attractive proposition?
You should always buy when the price is low. And when is the price low? When some particular company is not performing well, the prices will come down.
Right.
If you are tracking the stock market, you would have seen that IDBI bank share, which was trading at some point of time at 130 rupees or so, is now available at 40 or 50.
Absolutely.
And that too, it's a share of 10 rupee, not 2 rupee or 1 rupee. Now, what is wrong in buying it at appropriate time?
As far as IRDA's approval is concerned, have you had any sort of consultation with the other two regulators, RBI and SEBI, before giving this approval? Have you had any sort of communication before granting your approval, sir?
Jay, I cannot reply to it because these are all internal things which happen. But we are in touch with all regulators, in the sense regulators do keep in touch with each other.